Thank you, Jody. Thank you. Thank you and Marketplace Books and Traders Library for allowing me to participate today. Thanks for coming to listen, and I hope we do get some people excited about futures. After 25 years in the business, I've gone back to the basics. As you can see, I started with paper charts back in the early 80s, which we got once a week. Very excited. They were static. You couldn't do anything to expand or contract them. I don't know if any of you were looking at charts then, but it's a whole different story now with the internet. I love the fact that we can make them, size them the way we want, and make the bars look the way we want, and the way they work best for us. In the mid-'80s, I started working for a gentleman in Florida who was unbelievably excited. He had just gotten a CQG machine, which was the first computer I saw that allowed us to adjust the charts so much. I mean, we just thought it was money in a box. It was amazing. It didn't quite work out that way, but and I did work a lot with stochastic. He was very excited about stochastic. He thought if you just sell when it gets high and buy when it gets low, we'd all be rich. And once again, I'm sure you've all looked at indicators like that, and it doesn't quite work out that way either. That was a fascinating situation. I'm going to digress for a moment. And it also shows how we don't all always make money. He had a fund, and two of the legendary traders, I'm not going to mention names, but I'm sure that even stock traders have heard of them. Two of the legendary traders were managing his fund for the first year it was in operation, and they didn't make any money. And it just showed me that you don't always do it. In fact, a friend of mine took me to a website a year or two ago that showed that another legendary trader, John Henry, who now owns the Boston Red Sox, maybe people know him more for that, had his flagship fund was down considerably. So, we have to be able to live through the ups and downs. Anyhow, let's start looking at this. I'm old-fashioned. I love chart patterns. I've gotten away from indicators pretty much altogether. I'm a big believer in the importance of support and resistance, and I often act on wide-range reversals. Let's see which way we're going here. These are all futures charts. And I said this chart has three keys for me. The wide-range reversal was the wide-range bearish reversal was a sign of a top. And this is a weekly chart. The big bullish reversal was a sign of a bottom. I love big bullish reversals in an uptrend. Probably one of the better buying opportunities, perhaps the best opportunity I saw last year. And the big bearish reversal and close below support marked the next top. Here's a better view on a daily chart, which makes a head and shoulders. We saw many profitable head and shoulders tops in the summertime. You may also have seen them in the stock indices, I'm sure. In the daily chart, as I said, gives a better picture of the July top. Let's see. Oh, I didn't ask them where the little laser was. Well, the last bar also shows that we closed below the previous swing low. They confirmed the top, but a close below a previous swing low is always important to me. Oh, we move to another chart. This one has continued to decline. That top preceded a move for about $7, which in futures is about a $35,000 move. And here we have a gold chart. So the wide range bearish reversal was a sign of a lower high top. I love bars like that. I consider myself kind of a hurdle trader. Instead of using indicators, I like to widen out the bars and see a clear hurdle. Even though that had been in an uptrend for quite some time, actually it was a secondary top, the bearish reversal was an excellent entry point. Very clear. If it closed over that high, I was going to run. And I don't know if you're aware, but gold has been declining. Well, no, gold hasn't been declining ever since, but gold did make a good decline after that. It also showed up as a lower high top on the weekly. And that looked corrective to me. I don't know if it is or not, but the way how a market does what it does is very important. It didn't look, that first leg down didn't look terribly impulsive. I've perceived this to be a secondary top. I thought the second top would lead to a move about the same distance as the first top. So we had a target of $800, which, as you can see, worked out pretty well. This is a monster market. I'm not sure if any of you are familiar with natural gas, but it's very expensive to play. We didn't participate to any great extent. I wish I had. Once again, basic charting. It gapped down, broke the trend line, and closed below initial support. And that's a weekly chart. On the daily, we see a significant wide-range bearish reversal, which is one of the hurdles that I love. You could see that it was a very nice entry point. The market had already started to break down. If we closed over that high, I would run.
Closed over which high, sir?
The high that was marked.
Well, that's that little dot up there, okay.
The high.
That's your stop.
Yes, the bearish reversal bar, the top of the bearish reversal bar.
What's your thoughts on the current action with the natural gas? Because it's kind of going down and kind of trending sideways.
I'd have to look at a current chart. I haven't looked that closely. I'll get to what the charts that I'm currently interested in a little bit later on, and that's not one of them right now. I didn't see any signs of a bottom yet myself. And the CRB, at the time that this market broke support, once again, another little head and shoulders top. At the time it broke support, we thought it would decline to about 300, which is a very, very big move in the CRB. And I thought that would be big news here. But it's happened so quickly, as everything else has moved so quickly, that it's already well below 300. More break of support, real basic charting. You can see this is the way I look at the charts. I don't have any indicators on them anymore. We had a little head and shoulders top again, break of support. We had a limit down day. Limit down days are big in futures. We had limit, unfortunately, I don't have the laser to point to it, but we had a limit down day just before the blue vertical bar. And that was a pretty good sign that we were making a lower high top. Yes, sir?
How would you place a stop on that entry?
This particular entry would have been the break of support. I would have risked the secondary high, a close above. I'm big on closes, at least in futures. I assume they're just as important in stocks. I would have risked a close over that secondary top, not the very top, the one just to the right of the.
The right shoulder?
The right, yes. I would risk the top of the right shoulder. Here I mentioned on the first slide that I often act on wide range reversals, and I did in this case. However, this one didn't work. You can see that. And after a few days of sideways action, we ran with a very small loss.
Second line represents when you got out.
Yes, the second line is where we decided that we weren't getting the follow through we were looking for, and we just ran. I think this market, I don't have another slide, but I believe this market has fallen very quickly, or quite a distance since then. If you get a good signal and it doesn't work, there's a real good chance the market's going the other way. In fact, I think it's Joe Ross says, a buy signal that doesn't work becomes a sell signal. A sell signal that doesn't work becomes a buy signal. But I don't know if that's always the case, but when I get a signal that I believe is as strong as this one and it doesn't work, I figure it's going the other way. Here's another lower high top. I don't know how many watch the Forex? No, yes, we have one, okay. Well, this has declined. The euro has declined quite a bit since then. We caught a real good top here. It had been going up, well, that was the peak for a multi-year currency move in mid-July. And we had that little hurdle type of bar that I like. It was a very clear sign that it could be a lower high top. If we closed over it, I knew I was going to run, but it worked out extremely well, and it's down into the 120s now. And this, now here I do have an indicator. There is a particular stochastic setup that I do like. Do any of you use stochastics? Are they as popular they're as popular in stocks as they are in futures. I'm not big on divergence unless it's significant divergence. I want the slow D on a basic 14-period stochastic to be at least 10 points above or below the divergent D. So in this case, the slow D was at least 10 points below the previous D high. So we have this would have been the first, where'd it go? This would have been the first high. Could you all see that? It's not pointing too well, but this one conforms with that high. And of course, this one conforms with the divergent high. This D high, was at least 10 points lower than this one. I don't remember the exact number, but when there's at least that much difference, I like the setup. Yes, sir.
What settings do you use for
This is the basic 14 period. It's 14 3 slow K and 3 slow D.
14.3.3?
Yes. Oh, and here, this is the way the stock top looked on the futures chart. I don't know if it was as clear on the stock charts that you look at. This was the E-mini S&P. I mentioned that I like situations where you break below the swing low that led to the high. You know, it's basic Dow theory. We had been in an uptrend coming into here, and this was the last swing low that led to a high. In here, we closed below it. Now, I'll be honest, I didn't make a decision at that point to enter. However, this bar, I already mentioned that I love the big bearish reversals. That bar gave me a hurdle. That was a very clear sign that it was a good time to get short.